Hi guys, welcome back to my YouTube channel. My name is Miss Kadhoni, your one and only best female trader in Kenya. So guys, in this video I'm going to show you how I grew my account from $19, which is around 3,000 Kenyan shillings, to $156, which is around 24,000 Kenyan shillings. So I'm going to show you my strategy, how I entered the market, what made me enter that position, my take profit, my stop loss, and all the market conditions that I looked for in that trade. What was my entry, my exit, and my risk management. Also scaled in some trades. I'm going to show you, when it comes to trading, I always tell my students that you don't really need a large amount of capital when you're starting. As long as you have the skills, as long as you have the skill, as long as you have the skills and you know what you're looking for in the market and you have a proper risk management, everything is okay. So I'm going to show you how I grew my account. And yeah, so I took my trade or my buys on gold when it was at 2050 at this area. So what are the reasons that I took that trade at that key area? As you know guys, when the market is going up, it always forms a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows, and so on. What does it mean? It means that when we are in an uptrend, a market always forms a series of higher highs, a high that is higher than the previous high, a high that is higher than the previous high. This is a very simple yet most important strategy that you will ever need when it comes to trading markets. The market, you always have to follow the market structure so that you can be able to be on the correct direction of the market. So I took that trade at 2050 at this area after we broke this high, so we formed a higher high. I waited for a retracement and I took my trade at this area when I started seeing the buying momentum at that area. So guys, as you can see, we went all the way. I took another screenshot. You can see we are at now 2053, that is around that area guys, then 2055, and then from there guys you can also see that at 2065, and my floating profit was around $13 guys. The market was also retracing. The market also, when we reached at 2067, the market retraced, and I still held that trade because I was sure of the direction that the market is going. So the market continued, it retraced at this area, went up, and as you can see guys, we continue to this 2064 again, came back, then went to 2068. You can see at 2068 my current floating profit is around $73 at this place, and the market really retraced guys, and but I still held on because I was sure of the direction of the market, and I knew at this area. So at 2066 guys, when the market retraced, I entered a buying at this area. I took another position with even a higher lot size because I was sure at that area the market is going to go even higher and higher, and I took a trade at 2066. I added the lot size of 0. I used 0.05, which was my overall game changer because it was the trade that helped me. So I held that trade until 2077, and that is when I closed my trade because I knew at this area, when I started seeing the rejection at 2082 and this retracement, I knew it was enough, and I decided to close this market at this area guys. So I also took another trade on Nasdaq. I took that trade at 16721, that is around this area. When the market came back to retest this area, I decided to enter because I was sure that the market has formed a higher high, so I was just waiting for a retest at this key area, and I decided to enter my market at this area, and I held that trade during the festive season, during the whole of Christmas. So guys, because the market was already in profit and I entered at this area, I decided to lock in my some of my profit at 16,870. That is where my stop loss was. After this break, I decided to move my stop loss, and when the market came back and retraced on Friday 29th December, that is how now it hit my stop loss, and I decided to exit that trade with just a profit of around $28, which is still good. But overall guys, the trade on gold, that was my game changer. It really helped me, it really took my account to the next level. And yes, guys, that is the most simple and yet profitable way that I managed to grow that account. So what are the key takeaway lessons from that account? First, you have to understand market structure. It's the very basic, it's the foundation of the market. It helps us to know who is in control of the market. Is the market buying? Is the market selling? So market structure is very important. It's very major. You have to be able to learn and understand market structure. The other thing that you're supposed to focus on when it comes to trading, you're supposed to know the currencies you're trading. You're supposed to know this is gold, this is its peak value. If it moves from 2040 to 2045, you're supposed to know how much will I make from that movement in price. So those are the things that you're supposed to focus on when it comes to trading. You're also supposed to focus on risk management. Risk management is very crucial because you'll know when I enter this position in trade, I'll earn this, I'll lose this. Am I comfortable with losing this? For example, I was willing to risk $19 in that in my account. So you're supposed to know how much am I willing to risk, how much am I willing to lose, and that will really help you to be very comfortable. Lastly, guys, you're supposed to have a very strong psychology when it comes to market. You're supposed to be able to hold your trade for a long time. When it comes to trading psychology, you really have to understand what type of a trader are you. Are you patient with the markets? Can you stay in the markets for too long? Do you like risk? Do you hate risk? How do you react when you're in profits? How do you react when you're in losses? So those are the things that you're supposed to focus on when it comes to trading. And remember, patience is key. You have to be really patient until the market goes to your side. And guys, with good psychology, you'll be able to hold your markets for a very long time, and you'll be able to, even if you're in profits, you'll be able to hold your trades. You'll be able to continue layering in trades. And remember, always follow the trend. Wait for the market to show you the direction that the market wants to go. If the market is going up, don't try to look for sales. And if the market is going down, don't try to look for buys. Just stick with the direction of the market. Just look, where is the market going? Is it forming higher highs and higher lows? Is it forming lower lows and lower highs? Then look at key levels where you can be able to take your trades. What are the key levels that at those areas you're expecting a certain reaction in the market, and when the market reacts at that area, you can now execute your trade. Have a good entry and exit, and with that you'll be able to grow your account slowly. I always tell my students that when it comes to forex, you really don't have to start with a huge capital. You see many traders trading $3,000, $5,000, $10,000. You really don't have to start with all that amount of money. You have to start small, scale in, and grow slowly. If you can't be able to manage a small account, you can't be able to manage a big account. So you have to grow slowly and slowly and slowly and slowly. Learn the process. Practice makes it perfect. And I've never seen someone who has done something consistently and has failed in it. Put in the work. Remember, risk management is key, and be patient with yourself. Success is not an overnight thing. It doesn't you just don't wake up and you're successful. You have to practice. You have to continue practicing and be patient with yourself. Just put in the hard work, and then you'll just reach there. So like, subscribe, comment, and yeah,